punch joke. Okay, so let's single out Dallas-Fort Worth for a little bit, and Texas in contrast to the rest of the country. How do we fare? How do we stack up against other major markets?
Yeah, I mean,
this would be a good question for you, Kevin, but let's start with Dupree.
Sure. I mean, there's a big difference here than the rest of the country for sure. There's a macro story that that I think lenders, that equity partners, that even brands, that people really see. I mean, Dallas-Fort Worth is really the leader of that for sure. But when you have the type of corporate growth that we have, when you have the type of educated workforce, when you have the type of population movement that's coming here, the ability to get things done politically, that's a game changer in terms of how institutional groups look to invest. And so you're seeing markets even where you would have thought. Now, San Antonio has always been it's been a great market. I think locally we see it as a bigger market. Nationally, it's kind of always been seen as more of a second-tier market. That's not the case anymore. I mean, a place like San Antonio is garnering more attention than some of the traditional markets you might have seen across the country. So from our perspective, it's really been a focused, intentional effort to say, we've got all we can eat right here in the state of Texas. And so I've been on a Southwest flight more in the past 12 months than I have been in the last 10 years, just because everywhere we're going is within an hour reach of Dallas. So that's been a focus for us. I'm sure on the transaction side, I'm guessing, at least that's been the case for us, there's actually been a resilience in pricing here different than we've seen in other parts of the country.
Yeah, we've for 10 years we've been saying follow the jobs, follow the people. There's a reason to be here. Most of the hotel REITs had kind of redlined Dallas actually until recently. They're now looking and trying to find the one or two assets that will get them back into this market. Austin is on every major investor's radar. They all want a dot on the map. And to Dupree's point, San Antonio has definitely benefited from the growth in Austin and is looked at as like kind of the next tier kind of growth market in Texas. Unfortunately, Houston's still like a little bit of a challenge, except for like specific pockets. The Woodlands is actually performing phenomenally right now in Springwoods and other places where some of these micro markets in Houston are actually much better, but the overall market is just painted with this brush that institutions are not wanting to kind of jump back into that market yet. But Texas is a great place to be right now, especially in the hotel space.
Yeah, and I'll give the outsider's perspective, and I'll use a term of art. On fire. I mean, Dallas, Texas, it's unbelievable. And I say this as someone I've been living in New York now for 20 years, and I think, COVID has really exposed a number of the challenges that some of these blue cities, blue states have with unions and regulatory issues, taxes. It's really fascinating. I mean, we've seen, obviously, the Dallas and Austin and Miami and Nashville, these what we call the darling markets, have performed extraordinarily well. You've had strong job growth, strong population growth. I think that's going to continue. As I look at a market like Dallas, for example, which obviously has been a big city for a long time, but I think as the number of finance jobs and technology jobs increase, you start to have a network effect where the more you have, kind of the bigger the benefit and the more people want to come. And I think what happened post-COVID is the Zoom effect and the fact that a lot of people can generally work from anywhere makes it a lot easier for people to be here. One sort of change in perception and perspective, which I think is critical. I think there used to be this perspective that if you're in financial services, you need to be in New York. I want my banker in New York. Now people know, as long as your banker has relationships in New York and contacts and can get stuff done, there's not this expectation that you have somebody sitting in an office at 42nd and Madison doing the work for you. And so I think clients' perceptions about where they need their service providers, professional services providers to sit is very different. And so I think markets like Dallas and Miami and Nashville, Austin will benefit tremendously from that. So there's a real mind shift, that change in sentiment I think has taken place. And I think Dallas has, bright, bright skies ahead.
We're turning into a formidable financial services market too.
Absolutely.
Financial services companies expanding and
it
moving
here. It just continues, right? And the more you have, the more the more that gets built up. And then also you add in the cultural components, the art scene, the food scene, all of a sudden, and then cost of living. And I know it's run up, but you know, the cost of housing significantly cheaper here than a lot of other markets. And so, I like I said, I've been in New York for 20 years, and I remember I was a VP working at an investment bank, getting paid, pretty good money, but like I could afford a house in Brooklyn as a VP, kind of lower level, mid-level guy. Now you have to be like a senior managing director, and even then. And so there are a lot of people, highly educated professionals that, used to live in a place like New York or San Francisco and LA. They just can't afford it.
Yeah.
But they want good jobs, good community, they want a good food scene, they want culture, and Dallas offers that. And so I think, like I said, I'm really bullish on Dallas longer term. I think it's amazing. So
I want to go.
Yeah.
Sorry, I want to go back to one thing Dupree said, which is on the price point of hotels in Texas and in Dallas. We're finally getting some pricing power in the hotel space like we've never seen before. And so, in hotels, the general metric is RevPAR, which is revenue per available room, and our RevPAR is at an all-time high. That also translates typically into higher profitability, and that's translating into higher price per keys. Like Dallas used to have a $200,000 a key barrier on a price per key basis. Like nobody would ever pay more than that. And now we're making trades at $850,000, $900,000 a key at like way above replacement cost. And even your kind of entry level, like really, well-built, full service hotel is probably $400,000 or $500,000 a key today. And we could make the argument that's actually below replacement cost. But the pricing point has like doubled on getting into, markets like Austin and Dallas and San Antonio.